What's going on, guys? Track Effects here, back with another video, and today I'm gonna be coming at you guys with another video on GBP JPY structure and how to differentiate from the higher time frame and lower time frame. And yeah, so let's get straight into the video. So when on the pair GBP JPY, everyone knows that it's really volatile. It likes to move a lot. It goes up, down, and when it trends for a pretty long time, like we can see right here. Now when we're looking at GBP JPY structure, what a lot of people get confused with is all like this nonsense over here, that the market goes up and then down and then up and then down. People get really confused with it. Now what I want to do is I want to simplify what you see right over here. Now if you put your attention all the way right here, sorry about that, let me just quickly hit that. Yeah, so if you put all your attention, focus on this little bit of price action and ignore this, right? What you will see is that the market it's overall, we can see the market is trending up, right? So because we know that the market is an overall uptrend, we're not really focusing for any sells. All we're looking for is buys. We're ignoring any type of sell side order block. And yeah, so now that we know that our bias is overall bullish, what we can put our focus on is this area of interest right here. What we can see is that the market pushed up, created a high, created a higher low, and then you can kind of say it did create a new high right here. But then if you look at this area right here, you can see that the overall momentum started kind of dying down, right? Buyers were kind of dying down in this area and sellers started to come into the market. Now this doesn't necessarily mean that's in the overall bias to sells, because we know that this is our low, this is our high, this is our low, this is our high, this is our higher low, this is our high, and then this is our higher low. Unless we break past this level right here significantly down, we're still considered to be in an uptrend. So all this noise here, it doesn't matter. Your range for entry is going to be from this higher low all the way to this higher high. So if we go to the replay mode right now, like overall just up to here, we can say that our range is going to be from this higher low right here and this higher high right here. So this is going to be our entire area to look for buy side opportunities. Right, now let's delete that and go back here. Now what we can see is that the market sold off to this point right here, and from this point of interest, what it did is we can see that the market actually ended up failing to make a new high right over here. It made a new low, right? So we had our high and then we created a new low. So we broke structure and we created a low, and then we created a lower high right over here, a low that's lower than this high. So what that means is that the market is failing to go above. But with this move right over here, if we put all of our attention with this move right here, what we can identify is that the market broke structure significantly right over here. You can see these wicks right over here. These wicks identified that the market created a new high, and there's still a lot of bullish pressure. So after we had that expansion towards the upside and we broke structure, what we can see is that the market ended up retracing back to where the market originally expanded. Now if you were to draw this with the order block, you would take the last down candle and this would be your level. So now this is so much more cleaner. We can see that the market ended up expanding towards the upside right here. Let's make this red. It expanded, and after expanded we broke structure, and then it re-expanded back down to test where the expansion started. Now that we identified that the market moves in fractal natures where it expands, breaks structure, and then retests the original area where it expanded, right? Let's look a little bit towards the left or towards the right and see if the market did this before or not before but later on. Right over here, perfect example. We pushed up higher and then we created this deep pullback or retracement, right? So technically when this move happened, let's go to replay mode right here. When this push happened right over here, this expansion, we can say that this expansion actually broke structure right over here. We ended up making a new high for the next candle, and you can see this wick closed above, and on the lower time frame there must be candles obviously that closed above. So now that we broke structure, all that's left is for the market to retest the original area that ended up expanding, right? So now that we have our area of interest, this is going to be our point of interest right here. All we're doing is waiting for price to come back, retrace into the zone. You can call this your order block, demand zone, doesn't matter. And once price comes over here, obviously you would go down to the smaller time frames and look for your exhaustion, breaker structure, retest, and then continuation towards the upside. And as you guys saw already, this is all hindsight, that's exactly what ended up happening. And if you look to the left over here, this is the same move. The market pushed down, created this level of support, pushed up, broke structure right over here, created a new high, and then it retested that original level, and it did the same thing right over here. Now I'll give you guys one more example. Right over here, I know you guys already see this, I wouldn't have to explain this, but we see that the market pushed up into here, and once it did that, we created this level high right here. We created this high. Now we did break structure already, but it looks like the market is pulling back. Now after we broke structure once more, we created a new high, showing us continuations. All we have to do is wait for the market to re-expand or retrace, whatever you want to call it, back into our original area of interest, which would be the order block at where the expansion first started. And then when you play the candles, as you can see, the market comes exactly inside where the market first pushed up, and then it started being really bullish. And this is literally how GJ moves. It did the same thing once, twice, 3 times. And on the higher time frames, it's really easy to figure out. Obviously it takes patience, but on the higher time frames, it's really simple to find these moves. But on the lower time frames, you'll see the same moves, but it gets a little bit tricky, specifically because the lower time frames get really manipulative. You can see that the higher time frame is pretty simple. The market creates this low, breaks that, comes back into our original area of expansion, and then goes higher. Now on the lower time frame, what you're gonna see is the market do things like this, right? And then it's gonna come down, break this level high, break that high, and then come back down here, consolidate, and then go up. This is why you have to back test and understand the lower time frame structure in order to catch these moves. The expansion. So to give you guys a better example, what I mean by that is, let's say the market is consolidating and then it pushes up, right? If this area right here is what broke all this noise over here, we're going to be expecting the next time the market wants to go down, it's going to come down to that same area that expanded the first time, that broke structure, and it's going to replicate that same move, if you know what I mean. So that's what it looks like on the when you draw it out. But if you look at it like this perspective right here on live charts, what you can see is that the market pushes up, it breaks structure. After it breaks structure, it sells off to your order block or level of interest, and then from there it goes up. So to simplify this even more, you could say that it looks like a double bottom, right? You can consider that as a double bottom, right? But you have to understand that double tops like these and these are false signals, and we only enter when the market creates an expansion, breaks structure, retest inside of that same point of interest, and after it comes into that point of interest, we go down to a smaller time frame, like the put a replay mode right here, go down to the lower time frame, like the say 5 minute, and all that's left is to look for a breaker structure. So right over here we can see that there's a breaker structure, right? The market came up towards this, created this lower high right here. So came out, made a high, pushed down, created a low, lower high, lower low. So now the market wicked above that previous lower high, and then it started selling off. And now we're doing the same thing as we did on the higher time frame, but on the lower time frame now. So we see the market broke structure, and now all that's left is to look for an order block that we can enter off of. So for that, you can look at this last down candle here, right? Or you can even go to the 1 minute time frame to get a better. Okay, sorry, I can't go to the 1 minute. I guess it's too far. My bad, guys. Sorry about that. Small little mistake right there. Apparently I can't go to the 1 minute because it's too far back. But like I said, you want to find, you're on the smaller time frame now, and we've established our breaker structure right here. Right now you could have entered right over here, right? But as you can see, if you did enter over here, most likely if you did put your stop loss over here, you would have got stopped out. So let's say we are -1R right now. We entered right here with the stop loss at the low. Now most people, I recommend putting your stop loss below the order block, right, for a more conservative entry. But if you're really going for that sniper entry, what I usually do is I put my stop loss inside of the zone. Well, if you're going for a more conservative, you want to be safer than sorry, then I recommend you putting it down below the order block. So right over here, we're negative 1%, right? You're risking 1%, -1%, that's fine. Now secondly, we're down 1% right now, but we have to, we're still looking for entries. Just because you got stopped out over here, that doesn't mean the trade is, it's sells now. All that means is that our stops got hit, and we have to look for re-entries, and we have to analyze market structure again. Until the market on the higher time frame starts creating new bearish structure, and on the lower time frame it replicates that, right? That's the only time that we're going to be changing our structural bias to sells instead of buys. But right over here, what we can see is it did the same thing. We broke another lower high right over here, and after that lower high got broken, if you go towards like the, I think the 4 minute, yeah, minute right here, you can see there's a second order block zone right here. So entry would have been at the open of the order block. Stop loss could be either the close, or to be safe, you can put it over, you know, the next low below it. And then now your take profit can simply be either this next high over here. It really depends on how you trade. If you want to hold it up to here, go ahead, be my guest. But if we were holding it up to here, that would have been the our take profit. Now on the higher time frame, let's see how this plays out. Taps us in, and then let's just play this out. And this is all hindsight. I didn't actually enter this. This is hindsight. I'm not gonna bullshit you guys. Just to show you guys an example of what I'm trying to talk about. So boom, as you can see, take profit hit. Now if we analyze this on the higher time frames, like let's say the 4 hour, like we were on before, what do you see? Like we said before, the market, it broke structure. It broke structure right here, and then it came back down to where it originally expanded towards the upside. And then all we did is we went down to the smaller time frames, right? And on the smaller time frames, we looked for the exact same model, right? The exact same structure, but on a lower time frame. Because if the higher time frame is, we're looking for buys on the higher time frame, right? All we're waiting for is this move to be exhausted. What I mean by that is, a lot of people say, they see this huge move, the market's selling off. And most likely on the lower time frame, when the market is selling off like this, it's going to do a lot of stuff like that. It's going to be really messy. But all you want to do is make sure that the lower time frame correlates with the higher time frame. If your lower time frame is, if your higher time frame is bullish because you're looking for buys, then if the lower time frame is bearish, wait for it to transition to a bullish structure, and that's only when you're going to be taking trades. Now let me actually get out of replay mode, and now I'm going to show you the exact same thing that happened right here. Market break structure right over here. Let's replicate this. It breaks structure. What does it do? It comes back to originally where it broke structure, which was right over here. And I'm not going to go on the lower time frames to show you guys, but you guys know the drill. So it breaks structure, it comes back down. All it's doing is it's just doing fractal market movement. It comes to one level, break structure, comes back to that same level. And what a lot of people start doing is they start predicting that the market is going to sell off when they see things like this. Because I know a lot of people, a lot of traders, they say, okay, look, the market broke this previous higher low, and that means that the market is going to sell off. But what they don't realize is that that wasn't a significant level of structure. What we want to look for is we want to analyze from the low. So we have our low, we have our high, we have our higher low, higher high. Until we break past this higher low, we're not looking for sells at all. Specifically because this is the initial move that created a new high. Right over here, when the market created a higher low, it didn't create a new high. So this, unless we break, past this zone right over here, we're still looking for buys, and then this does not identify as, reliable market structure shifting in, to a bearish instead of bullish. So like I said before, same thing happening. The market creates an expansion, breaks structure, retested where that expansion happened. Now this can be identified on the smaller time frame so easily. Sometimes it does ugly things like this where it can, it consolidates. But if you can differentiate from manipulation and wait for these these moves, like where the market expands, break structure, retest that expansion, then you can become really profitable with this with this idea. Now I'm gonna be taking you guys through this trade that I took on GBP JPY this at the start of this week, these 3 trades. So first thing right over here, if we go towards the 15 minute, I think it was, not too sure, I think it was a 30, yeah, 30 minute. So the 30 minute right here, let's go to replay mode, and right here, I seen that the market created this order block, and because my higher time frame is bullish, right, we can see the 4 hours really bullish. I'm gonna expect that the 30 minute, 15 minute, 5 minute, 1 minute, every single time frame is going to be bullish as well. I'm looking for buys. That's my bias. So I see this order block. All I'm waiting is I marked up this order block. All I did is I waited for price to come back into this order block. Now once it did, drop down to the 1 minute time frame, and we seen that the market actually came inside of this order block once. I wasn't here at the chart at the time, I was just watching it, but we came into this order block once and automatically pushed up. Now after we pushed up, we didn't actually get a significant break of structure. I was expecting the market to break past, this high right over here, but we actually didn't really end up doing that. So you can technically see that this move over here was just to influence more people to buy. So the next time the market does come down, it's going to break past that level to stop them out, right? Because we never actually got a break of structure over there. But right over here, if we're looking at market structure, Sorry, not yet. Let's play a little bit. So I'm waiting for this breaker structure to happen right here, and right over here, there we go. And I seen that the market is consolidating right over here. All it's doing is it's consolidating. We don't have an entry reason, right? But what we do know is after the market was bearish on the smaller time frame, right, where it was selling off right here, it started exhausting and consolidating, giving us clues that the market is going to be transitioning into a bullish trend. You guys can see the market broke past this level of interest right here. We had this area where there was just resistance. The market was failing to break past it multiple times, but then eventually we finally got that breakout, right? We got that breakout, identifying that the market is bullish, and we broke structure, and we're going to be creating new highs. Now that we broke this level, this, like I said before, once we break structure, we want to look for that retest inside of that original move that broke structure. So this is the original move that broke structure. We have our last bearish candle. So our entry would have been just the open right over here. And our stop loss can either be the close, or it could be, you know, outside of the order block. Like I said, this all depends on how you want to be trading. Stop loss was just over here, something like that. And entry was at the open. So this is a 6-to-1 risk to ratio. And we wait for the market to come down and see what happens. And as you can see, it taps us in automatically, and then from here it just completely there we go, TP hit. So TP got hit, simple trade, you know, break a structure, retrace on that expansion, and that's all that really was. Now if we go play the next trade that we took right over here, this trade. Now this one didn't actually toggle us in or trigger us in. It missed it by like a few pips, like 0.8 pips, really crazy. But the reason I was focusing on this level is specifically because right over here we have our last down candle, and then we have a breaker structure. All I really waited for was the market to retest that area where we broke structure. And what people see is that, you know, let's go to replay mode, like up to here. Now this is a perfect example. You can see that the lower time frame is starting to show us bearish structure. It's creating lower lows, lower highs. Now, in order for me to enter on the lower time frame, I need to make sure that my lower time frame correlates with a higher time frame. So I need to see the exhaustion, the retest, and as you guys know, expansion retest. So in this case, we already had that expansion retest over here. So that's why I had my limit set already over here. All I was really waiting for is for my trade to get triggered in. But you know, as you can see, it ended up missing my entry by a couple pips, by like not even a couple pips, like 0.8 pips, but we eventually ended up hitting take profit. I'm gonna go showing you guys through my second trade that I took right over, third trade that I took right over here, and I'm gonna be explaining why I took it. So if we go towards the replay mode and go back a little bit, you can see that we have this 15-minute order block. Now I went to the 5-minute time frame and I refined it to this 5-minute order block right here. As you can see, we broke structure, we left this down candle, and then we had this huge expansion towards the upside. Sorry about that. So all I was really waiting for is the market to come into my level, and then from there we would you know, look for our schematic of the breaker structure and then the entry. Now if you go to the 1-minute time frame right here, I can show you guys what actually ended up happening. The market came close to our level of interest, which is the zone, but instead of it tapping us in this level, what it actually did is it came near it and then it automatically started going up. So this means that the banks were influencing people to buy, because look at this. You have a breaker structure right over here, right? We break structure right here, and then people would say, okay, so wouldn't you enter over here? The reason, yes, the theology of this is correct, but the way you implement it is wrong. Because we said when we look for breaks of structures, you know, expansion, order blocks, we want it to be in our higher time frame level of interest. This happened literally in the middle of nowhere. You know, it's just a bunch of bullshit basically. It happened in the middle of nowhere. So because that happened in the middle of nowhere, we're not going to be, you know, focusing on this level. What we're going to be focusing on is when the market taps us into our level, that's when we're going to be looking for our schematic. Now I actually took this trade. I went against my plan. I'm keeping completely 100. This is actually a mistake I made. Luckily it went my way, but I'm going to show you guys my mistake and hopefully you guys can learn from it. So right over here, the entry was really premature. I saw that we had this order block right here. Right over here, we have this last down candle. So I highlighted that candle, and let me keep this in mind. We have yet to see any breaks of structure. We haven't seen any breaks of structure yet. But the market comes into our order block, automatically taps us into the pip. Stop loss was at the close right over here, and then TP we were targeting just over here for 18 pips and a 2 pip stop loss. So it triggers us in, right, automatically, and luckily it went our way, right? But let me show you guys what actually ended up happening. So it goes our way for a bit, it consolidated a little bit over here, and then finally started pushing higher and missed the take profit by like, I don't even know, by a couple pips. But let me tell you guys why this was wrong. Specifically because I entered when there's no breaker structure. So initially this is just like, you can consider this as gambling because I entered off of an order block. I went against my rules, and this is something you guys always have to keep in mind. Always follow your rules. Keep a trading plan on your side. Print it on your print it out, put it on your wall, look at it every single day. You want to follow your trading plan to the every single thing that's written on it. You have to make it like a checklist, right? Over here I didn't do that, so this is completely wrong. I entered emotionally, and that's something that I myself still have to work on, and I want other people to avoid doing as well. So let me just get out of replay mode. But as you can see, the market ended up selling off, breaking past my stop loss, stopping everyone out, and then going up. Now luckily what I did is, the second it went into like 4 pips in profit or something like this, I moved my stop loss to break even, and I started taking partials along the way. So I did still come out profitable, but that's because I was watching my risk management. I was managing my trade, and that's something you guys also have to look out for. If trade is in profit, you never want to leave money on the table. If you're if you're a little bit concerned that the market's going to reverse and stop you out, move your stops to break even, take partials, and call it a day. Because you can never lose if you're taking money. People get a little bit greedy, because let's say they were $500 in profit, and then once it goes like up to $800 in profit, they're going to say, okay, 500 isn't enough, 800 isn't enough. They're going to want to see more and more. But that's the emotion coming to you. What you have to realize is, no matter how much money you've made, move your stop to break even, secure your position, protect it, take your money out, and call it a day.